don't just go to the credit union you've been at since you were 7 years old that your parents told you to open a bank account with or a savings account to purchase a house, especially if you don't have, trade lines. And these are very simple to do, these trade lines. I mean, you can go to Experian, do an Experian Boost, use utilities and cell phone, charges that you're making your cell phone bill as a trade line. There's so many alternatives to your credit. And another big one that most people don't want you to know, you can use a non-authorized user account. That also can be an added trade line. Most mortgage professionals don't know these secrets of the industry. The other part is you don't need money down to buy a house. There's a lot of products. I mean, Somerville, South Carolina is a perfect example. I mean, USDA 100% financing all day long. I mean, and if you get a seller's concession on that property, it covers your closing costs.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey folks, welcome back to the show. Today's guest is in the mortgage space with Revolution Mortgage. They've got over 100 branches across the country. Please welcome Kevin Parsells. Kevin, welcome to the show.
Dylan, thank you for having me, man. Appreciate it.
Absolutely. I always like to start off at the top by asking guests how they got into real estate. How'd you get into real estate?
Actually, so I was originally at 18, found an ad in a New York Post for a stockbroker trainee, and took the job as a cold caller, and then became a stockbroker and investment advisor on Wall Street for 7 years. And at the time, I was flipping properties. And I got to the point where I sold $1 million house, and I remember looking at the statement. The real estate agent, I think, made $45,000, and the mortgage professional made about $45,000. And I sat there and said, $90,000 on one transaction. So the next day, I went and studied, and before I knew it, a week or two later, both myself and my wife were real estate agents. And then I realized, well, on the mortgage side, I can also make some money.
Yeah.
So why not get a mortgage license? And then realized, wow, I can work from home or anywhere in the world, just like yourself. And it's been a great success, man. It's been an industry that I've stayed in now for nearly 20 years. And it's been a pretty cool ride.
I want to ask you about deciding to go into the lending space, the mortgage side, because I had the same thought here recently. So I've only had my real estate license for really less than a year. I got licensed in April of 2025. I'd been involved in distressed real estate as a wholesaler working with investors prior to that. But what I very quickly saw was, as soon as you decide, if I'm on the outside looking in, hey, I'm going to go buy a home, I'm thinking, okay, I need to reach out to a realtor. I go to the realtor. What's the realtor going to say? Do you have financing? Where's your pre-approval letter? Have you been pre-approved? Here, go talk to my lender. So now I'm thinking, wait, did I get in on the wrong side of this deal here? Did I need to be the lender? So that's where I'm thinking. Did you have any of that sort of a similar process when you decided to get into lending?
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
100%, because I was saying, well, I'm going to start. This was, I think, my third property at the time. And I'm like, I'm going to be doing this. At the time, me and my wife were young, so I was buying houses, fixing them up as I'm living in them, and then selling them. So I'm like, if I'm going to continue to do this, even if it's 3 times a year, I'm not going to give $200,000-$300,000 up in commissions. I'll keep that money for myself. That was originally the plan. And then, funny enough, one of the guys that I know that was as a stockbroker went into the mortgage business, and he pulls up in a Lamborghini. This is in like 2002, 2003. The guy's like, oh, I'm going into work. And I'm like, dude, it's 11:30 in the morning. I took the day off. I'm like, what are you talking about? He's like, oh, I only go in for a few hours a day. Now, lending was a different world then. It's not so much like that now. A lot of guys in the industry would probably kill me for saying that, but many of them are working, 90 hours a week now. It's a different environment we're in. But the bottom line is it's still there's a lot of financial gain in both industries. I like the mortgage side of things because I don't have to be bringing people around in a car, meeting them at the house and showing them properties. And it's just not my thing, man. I'd rather be free and be able to be where I want to be when I want to be there. You know what I mean? And still be able to make good money. So yeah.
I echo that, and I'm not in this space, but I see the advantage of it. And then I've also seen this trajectory for real estate investors, many of the guests of the show, where people will go from fix and flip to multifamily to then lending. So I've seen that trajectory as well. I want to pivot a bit here, Kevin, and ask you about scaling within your career, but then also scaling in general in the mortgage space. You mentioned, and we were talking before the show, that you were in New Jersey for a while. Was that where you got started in mortgages?
100%. Yes. New Jersey. Mostly Monmouth County was really my territory. But when I was originating mortgages, it wasn't just in New Jersey, but that was my stomping grounds. And I started doing business in, of course, Florida and other states across the country. And now, more or less, we're national, right? So we're in almost every state in the country because there are certain pockets of certain markets, regardless of where you're at and what state you're in, that are exploding right now. I'm in Charleston, South Carolina. We got Lennar building 9,000 single-family homes right now. I mean, that's crazy to think about that. They're building neighborhoods over the last couple of years. So, the country's really changed and transformed, and it makes sense to not only lend in your local community, but also have the option to go outside. So, yeah.
The
it's huge.
Carolinas are a really interesting area. I've heard only positive things about the Carolinas, and specifically when it comes to family. So unfortunately, I'm woefully ignorant of the Carolinas. I need to go because I've had so many guests tell me it's a great investment opportunity. It's great for family, great for young families. So it doesn't shock me at all that there's big interest from builders in the Carolinas. I want to ask you about that, the builders, and then also the interest that we're seeing really across the board in every regionality of the United States for ground up construction. You mentioned that you had done some flips early on before you got into the mortgage space, and there's been lots of flippers on this show, but I do think that in general, ground up construction is where everything does seem to be pivoting to, both because of market conditions and then because of the housing shortage. Do you feel any of those pressures as well, that there's a lot of interest in new construction?
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
All the time. I mean, we work with hundreds of builders nationwide. Some builders do 20, 30 units a year. Some do 10. Some do hundreds, if not thousands, right? For the big lenders like DR Horton or Lennar or, some of the big boys out there, we would get what you would call the fallout. Fallout are usually borrowers that maybe were qualified in the beginning to buy that house. And then all of a sudden, 10 days prior to close, they get a denial. And now we have to shift and come to us as the 911 saver and basically run that as a non-QM, non-qualified mortgage product, right? So we go P&L or bank statement or have alternative options rather than just the standard banking that you would do it. A Lennar has their own mortgage
Right.
lending space. The Horton also has the same thing. So we're able to do things where a Bank of America, Wells Fargo, as a bank would not be able to offer the products that we can do. So it's huge. Yeah.
I want to ask you, maybe get a little bit granular here, but don't necessarily give away all the gold for our audience. Maybe save some of it. But I can speak personally, going back maybe, I guess, close to 6, 7 years ago at this point. Before I thought about being in real estate, I was looking at buying my home in San Antonio. And it was frustrating because I was being told you don't have enough established credit. And I'm like, well, I've got good credit. What does it mean I don't have enough established credit? Well, you're going to need X amount of down payment. Now that I'm in the real estate space, I'm thinking, I just didn't connect with the right person. I just didn't know the lender who was going to help me kind of through the hurdles and see down payment assistance programs. And so I kind of just said, well, I guess I got to have tens of thousands of dollars saved up. And I guess I got to have established credit, someone to co-sign with. Good credit
Right.
isn't enough, and I'm curious as real estate guys, but as just people in the real estate space in general, what can people do, or what general advice can you give folks to make sure that they are connecting with the right person in their area, right?
Right. 100%. First of all, don't just go to the credit union you've been at since you were 7 years old that your parents told you to open a bank account with or a savings account to purchase a house, especially if you don't have, trade lines. And these are very simple to do, these trade lines. I mean, you can go to Experian, do an Experian Boost, use utilities and cell phone, charges that you're making your cell phone bill as a trade line. There's so many alternatives to your credit. And another big one that most people don't want you to know, you can use a non-authorized user account. That also can be an added trade line. Most mortgage professionals don't know these secrets of the industry. The other part is you don't need money down to buy a house. There's a lot of products. I mean, Somerville, South Carolina is a perfect example. I mean, USDA 100% financing all day long. I mean, and if you get a seller's concession on that property, it covers your closing costs. Why are you paying $2,200 a month in rent when you can own a house that is probably appreciated? That house for the same mortgage, maybe it was, $250,000. Now that house is worth $350,000, $450,000 if you bought 2-3 years ago, right?
Right.
So now you're sitting on an extra $150,000 in equity. So if you decide to sell, instead of sitting and renting and doing the same thing everyone else is doing, and you're not building anything, you're giving your money away. So why not look at opportunities? Give us a call. I got a number of mortgage professionals all across the country. It doesn't matter really what state you're in. Somebody can help you. And if we can't, we'll at least refer you to somebody that can. And it doesn't matter if it's a DSCR, meaning an investment property. I mean, some of these properties, you don't even need income. It's based off the appraised value of the property. So in most cases, if you have a principal plus interest payment, let's say it's $2,000 and the rent's $1,800, they'll still qualify you to buy that investment property if it makes sense, right? And this is one thing I told my son to do. My son just turned 20. First thing you should do is buy a property, a 2-unit property, live in one, rent the other out.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
house hacking.
Every one of the richest people in the business will tell you the exact same thing. If you can get a 3 unit or 4 unit property and live in one and then rent the other out, it pays the mortgage for the property. You're building equity, you're building value, right? And at the same time, you're not even having to make a payment because the tenants are paying it for you. So that's an
Yeah.
easy way to build a net worth and take advantage of some of these amazing programs that are out there. You just got to get with, mortgage professionals and really kind of do your due diligence. And this is a great podcast to kind of learn these little secrets and tricks of the trade to.
Yeah, it can be a challenging journey if you're on the outside looking in and you have no experience in real estate. Maybe family doesn't have connections tied in, and so you're thinking, well, I'm going to go to my bank, right? You mentioned your credit union, and then you get turned down there. But you mentioned also too having a son. Around age of 20, I'm thinking, for folks who may be in college, you're going to be spending 4 or 5, maybe 6 years, maybe on the short end, 3 years in one place in a college town. That in and of itself is a great opportunity to be looking at, a duplex, a triplex, a quadplex, right? Because if you're going to be there for 4 or 5 years, and in many cases, people remain around that area for the year after graduation, that conservatively is typically what people are looking at as an exit timeline for that type of a deal. They're looking at holding on to it for that duration. So from an investment standpoint, let's say you break even, right? You purchase the property at the end of that time. Let's say you did have to pay some rent, but then you go and you end up selling it, which is probably not what's going to happen. You're going to end up renting out those other 3 units. When you go to sell it, you're going to get your money back. I mean, it might not double your money, but you're going to get your money back. Or you could hold on to it versus you're going to be spending, depending on where you're at, right? If you're in Boston, Massachusetts, or New York, I mean, goodness knows how much you're going to spend on rents. So I think more young people should really start to look at, I'm going to be spending an arm and a leg on rent. How can I
Yeah.
make this work as an investment if I'm going to be here for, 3, 4, 5, 6 years anyhow?
100%, man. I mean, listen, if you're smart enough to take the risk, you win. I mean, every time on real estate, the thing I always looked at is historical data, right? Regardless of what you're investing in, look at the historical data. I mean, you bought a house in the 60s. Can you imagine a house that you bought for 20,000 in certain
Yeah.
markets is worth $3-4 million today? I mean,
Yeah.
listen, I bought a house here in Somerville for 300, and 5 years ago, that house is worth probably 700,000, 800,000 now.
Yeah.
And if I didn't do it, where I know a few other people, that are family members that just still renting, and it's like, man, you missed out on like $300,000-400,000 or more of equity. And especially in college towns, I mean,
Yeah.
yeah, valuations going through the roof. It's hard enough
Through the
trying to
roof.
find those properties. So if you could luck out and find one, and you got people that that you can trust, and listen, it's not hard. You find some renters. You're going to run a background check. You're going to take a look at the credit, make sure they're good qualifying individuals that you don't have to worry about. If you could find a tenant that could pay the whole year off, you're already ahead of the game.
Yep.
So definitely well worth building a strong portfolio in that regards. 100%.
Kevin,
Yeah,
we
great.
are coming up on time here. I know that you have branches across the country. So for really wherever folks are, you can facilitate and help them through the process. Where can folks go to either reach out to you directly or to learn more about Revolution Mortgage?
Yeah, of course. Just look, Google me, Kevin Parcells, Parcells. My website's kevinparcells.com. One of the important things I learned in this business from day one was brand yourself, not the organization, because companies go, they sometimes sell, you don't know, the industry's a wild one. Brand yourself, your name, that's what's most important. So visit kevinparcells.com. And if you're a real estate agent and you're looking to scale your business, I can literally show you real verified data that we've worked with over 100+ agents that have all doubled their production in 2025. Doubled their production
Wow.
by working with other mortgage professionals. And we have a platform that's absolutely insane. I won't get too into depth, but it's something that not only helps scale the real estate partner, but it partnerships these individuals together. So rather than doing, 20 units a year as an agent or 15 units a year, let us help you scale to 35 to 40 units. Or if you're doing 40, go to 80. And we have some things recently on the compliance side based on HUD and some changes that have happened that allow now agents to start earning some money on the mortgage side of things.
Hmm.
It's absolutely amazing. So if you want to learn more, kevinparsells.com, feel free to give me a ring, or, you can join and subscribe. And then one of our great people will connect with you.
Kevin, thank you so much for coming on the show here today.
Yeah, Dylan, awesome, man. I love what you're doing. Keep it up. Best of luck. If there's anything I could do for you or anyone else, brother, just feel free to reach out.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.